Holtz-Eakin joins us right now, the former Congressional Budget Office Director. Doug, always good to see you. It does stand to reason, despite targeting the rich and companies that haven't paid taxes, to pay a 15% minimum tax, even though they're a small slice of the proverbial pie, that if you're pouring $80 billion into the IRS over these next few years, you're going to have to tap more than the well-to-do and some companies, right? It stands to reason, to me at least, that individuals in the middle class and even below will be hit.
Almost certainly, Neil. I mean, the IRS's job is to collect the taxes that are legally owed. The $80 billion is to improve their ability to do that job. And so they're not going to pursue whatever the political message is. They're going to pursue the money. And in the tax gap, the money is in small businesses. It can be in people who misfiled the earned income tax credit. They can be some not particularly affluent Americans and small businesses, and they are going to feel the impact of this.
All right. So when the administration talks about paring deficits over the next 10 years, I think they're talking about $300 billion over 10 years. So let's round it out to about $30 billion a year. Of course, we've been running trillion-dollar deficits, so it's kind of in the eye of the beholder. But do you believe even that? The CBO, the current CBO, seems to have doubts, at least near term, that it's going to measure up. What about you?
That's going to have zero impact on the inflation outlook. And by the way, they've already spent money that offsets that. They passed the $300 billion deficit finance CHIPS and Science Act. They passed an up to $600 billion increase in veterans benefits in the PACT Act. They have continued to do what Congress does, spend and borrow. And this bill will have zero impact on the inflation outlook.
Let's talk a little bit about the backdrop for this, though, an economy that might be getting Washington help to deal with inflation. But what if inflation itself is peaked? That it's certainly nothing to write home about. It's still a problem. But there's a growing belief, at least given the market's performance, I don't know whether you agree about that, Doug, it's a market's way of saying we're through the worst of it. Is that a little premature? How would you describe it?
If I was in the White House, I'd be very concerned. We have labor force participation rate that hasn't gotten back to the February 2020 level before the pandemic. So there are about 3.5 million workers fewer than otherwise would be. Productivity growth has been negative for 2 quarters. And so it's workers and productivity that deliver increases in output, increases in the standard of living. So I'd be all in focused on those things that increase long-run supply-side growth. And that would be low taxes on the return to saving, investment, and innovation, incentives to work, a light-touch regulatory burden. And then this administration is doing none of those things. And so I'd be very concerned that even if inflation has peaked and the Fed can conquer it, that what comes out the other side is an economy that's just not going to deliver for the American people.
We'll watch closely. Doug, great catching up with you. Douglas Holtz-Eakin, the former CBO director. He's crunch these numbers and come up with some of the scores that we see the present-day CBO doing early on with this inflation package that the president's going to sign today.